But right now there seems to be a carry trade. Borrow dollars and sell them and buy gold. Borrow dollars and sell them and buy stocks.
Buy anything that yields more.
Anything that yields more. Okay, but I'm worried about that.
Don Luskin, I'll bet you're worried too.
Oh, I am, but I would actually be more worried if the opposite was happening. We talk about this carry trade as though it's a kind of natural phenomenon, like a rainbow or a mountain, but it's not. It is a man-made phenomenon. In fact, it is a Fed-made phenomenon. The carry trade has been very specifically engineered by the Fed. The reason we have zero short-term interest rates is precisely because the Fed wants to drive the world out of safe haven assets and get the world to once again reinvest in risky assets. Like you mentioned them, gold, stocks, emerging markets.
You think
we could add to the list.
purposely driving for an asset bubble? They purposely want an asset bubble in some of these assets?
Well, no, I would think of it this way. Think of it as what we had before was an asset flat tire. They just want to get that tire reinflated. Now, we run the risk of getting it so overinflated that we get a blowout. But we're not there yet.
David?
As soon as interest rates firm in the United States and the dollar starts to strengthen, which it will, I'm convinced, this trade is over and gold is going to come back down, I think, pretty hard. So I would avoid it.
Don, I hear that argument a lot. We see everything going up. We see stocks going up. We see commodities going up. We see treasury. Look at the yield on treasuries. Treasuries are still being bought to a very, very high degree.
Right.
A lot of people just think this is a liquidity-driven rally.
Right.
And the minute, as Vince says, the Fed starts to say that, even a hint that they're going to tighten, all the air is going to come out.
I don't agree with that.
Don?
I do agree that this is reflation-driven. Where this is going to get ugly is when it starts becoming inflation-driven. When you start seeing the S&P go down and gold still going up, now you're not talking reflation anymore, you're talking inflation. And until you see that day, then the Fed doesn't really have any motive to put the brakes on. And folks, let's be honest about what it means for the Fed to put the brakes on. It doesn't mean hints. What are they going to do? Hint that they might raise rates from 0 to, get ready, 2%? By the time they get
you know
it to
the argument,
anything
Don,
that's going
right?
to make
That
any difference
the
to
markets are
inflation,
discounting.
years are
You
gonna
know
go
the
by.
argument from their side. Guys, good to see you. Don, don't you miss Ronald Reagan?
I so miss Ronald Reagan, and when I look ahead to the future, the only thing that makes me give up hope is I don't know who the Ronald Reagan of the future is going to be. If he's out there and you can hear me, rise up.
Vince Fair, bullish?
Well, yeah, but look, let's be clear. Doubling in 10 years isn't exactly some kind of exceptional raging bull market. That would be approximately the average compound annual rate of return of stocks over the last century. So, yeah, okay.
What about in the short term? We've had this tremendous rally, yeah. We're driven higher and higher by the dollar.
Well, look, in the short term, there's just no two ways about it. We have had the third best stock market rally in the recorded history of stocks. The last two times it happened, which were in 1932 and 1915, both of those times occurred at the onset of new business cycle expansions in which corporate earnings were about to triple. Now, does anybody intend to go on a CNBC camera with a straight face and say that in the expansion that we're unsteadily embarking upon at this moment, earnings are going to triple? Give me a break.
Don Luskin, what about healthcare stocks? Would you go near them right now after we see the House vote for this, what do you call it? The healthcare suicide mission I see here?
Yeah, the Pyrrhic victory, the suicide mission, healthcare deform, call it what you want. I think reform is dead. It's not, or at least what Obamacare is dead. That's a great thing.
So you should buy the healthcare stocks if you think that.
Yeah, well, that's fine. I would do that, but it's not the best play. You know what the best play is?
What?
The best play is to put half your money in cash and put the other half in small cap gold stocks. That's what I'm going to do. And you can take that gun away from my head because I'm not going to mention any names.